Hey guys. So, like I was telling you before, I'm looking to transition more into what I do best, which is identify patterns, finding hidden markets, hidden assets. And my job is to find those things and deliver it to you guys. All right. And so, if that is something you really want to be part of, I highly recommend just go ahead and join the Dark Horse Investor Academy. And everything that's included is contrary research reports. All right, gonna do some detailed analysis, focus on hidden markets. I'll be doing technical analysis, etc. Now, I'm trying to phase out of doing so much of the teaching aspect of things. I really want to be able to provide, this services of a true analysis and finding these hidden, anomalies in the market and inefficiencies. All right, so let's get straight to it. All right, and so I'm on ACOM and this particular stock. All right, I'm looking at the ratings given by the analysts. All right, and so if you go back over here, you look over March 14th of 2024, Truist gave it a buy and it had a target of 106. Well, okay, let's go look. What do we notice? All right, so this is around March 14th, right here on a Thursday, and price pushed up to around 98.76. We were at around March 14th. We were looking at a 92, no, I'm sorry, a 91 or $92 stock, right? So it pushed up to about 98, which was a good rally, right? However, we then rolled over and we dropped to $82.17. So this right here is a classic bull trap. Okay. And what caused it? All right. What caused it is the analysts. All right. So most retail investors, especially old school retail investors, they believe in these big, huge companies, these institutions giving these buy ratings, right? And most people, for the most part, was right as they got in, but depends on how long they held. They really got destroyed on this drop, right? So we take a contrarian stance, right? We want to study this. This is what I want to do with the analysis. I want to go in and do deep dives and be able to deliver this to you guys. Now, watch this. We get the same thing initiated on November the 22nd of 2024. Now, this time it was Goldman Sachs. They had a buy target for 130. What do we have over here? All right. It was November 21st on a Thursday, 22nd on a Friday. All right. And then we rally up by November 29th. We hit a peak. So we went to 118. We started out around 114 ish. And then we go up to 118, $4 some change move. And then what happened? We rolled over. This was a what? Another classic bull trap. Are y'all starting to see the patterns? Okay. The patterns are showing us is that these some of these buy ratings are nothing but liquidity, exit liquidity moves. Okay, the news, they work with these institutions, these news releases, these catalysts, these analysts. All right, and then they found a way to generate enough liquidity where they can offload their position. They can't do it immediately. They want to do it to where they want to push the price and then they can unload. And we clearly see this right here. And it's hundreds of stocks to do this repeatedly. In fact, I'm about to show you one where instead of it being a stock, it was a Forex pair. All right, here we go. We have an article written on March 12th, 2025. Okay. And in here, it talked about, all right, I want you to get out of this now. All right. JP Morgan is recalibrating its trade portfolio in response to evolving macroeconomic conditions. citing in moderation in U.S. economic exceptionalism. All right, renewed tariff uncertainty and lingering optimism over European reflation. I don't know if that was supposed to be inflation, but I never heard of reflation. But I learned something new. I'm gonna look that up. But anyway, they're gonna be initiating a short USD JPY position in cash, paired with a short on NZD JPY basket. Okay, they're also going to short the CAD JPY and remains as a favorite strategy to capture both themes, reflecting direct tariffs risk facing Canada and the Canadian dollar's historical sensitivity to the US dollar dynamics. All right, here we go. Let's look at this NZD JPY. All right, we're talking about March. Okay, here we go. And this was on a 30-minute chart. The other one that we looked at, ACM, that was on a daily chart. So here we go. This is March 12th, and they initiated a short. Remember, it's short. So how many retail investors read that article and they went short? Now, guess what? It worked initially. This is the what over here now? This is the bear trap. Okay. This is the bear trap now. And look what happened. Look at this massive move. Okay. Look at this massive move up to wipe out all the bears. This moved uh put this back. This moved roughly, let's see, 333%. I'm sorry, 333 pips. Sorry, I'm a dog in the background with a toy. All right, so 333 pips to the upside. That's a massive move, right? Now, granted, we did have a nice little drop where if you would have shorted it, 114 pips. So you can't beat that, right? So either way, someone did pretty well. But we clearly see that this was a trap to get as many, because look at this strong move, right? And then when you look at this move, what are some things you notice that we could be shaping up as a, what is this, a head and shoulder pattern, right? It's similar to this right here. You see, we get the left shoulder, we get the head, and then we get the right shoulder, and we drop. All right, it's something similar. It's not the best, but you get a little right shoulder, you get the head. Maybe this was going to be, I'm sorry, left shoulder, you get your head. Maybe this was going to be the right that form, and we were going to drop. And a lot of people was probably anticipating that, especially right here. So look at this move right here, where where's my tool where I need it? Here we go, trend line. Okay, we look at this, and I do a bar replay as well too. We look at this, okay, and let's just replay this back to about right here. Okay, all right. Look at this breakout. Okay, you had this break of this market, consolidation. We're moving, we break. A lot of people went what? Probably short here. Oh yeah, we definitely coming down in maybe these levels, right? And look what happened. The trap comes in, and we just move inch higher, 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 right? And this probably liquidated a lot of people's accounts as they kept adding to go short, 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 right? So I just go ahead and stop this and put it back in real time. All right. So you see how, as contrarians, we always want to be looking for the other side. Now that doesn't mean that every time the majority goes in one direction, doesn't mean that we can. It's automatically going to be 100% that we can just do the opposite. It's not 100% true, right? So, yeah. Now I want you to look at this. All right, I want you to look up here where you see the longs, and I want you to see the shorts. And let's go back over here to the March 12th. And on March 12th, if you look up there, it was 72% that were long and 28% short. We all know what happened on the 12th. All right. Everything just dropped. So there's 72% that were long. Okay, they got ate up. However, if you look, the longs still somewhat stayed fairly in control. So by the 16th, it was 71% that were long and it was 29% that were short. So if we go and look at March 16th, we're up here on a Sunday at 16th, and you would think that we could just go opposite because it's only 71%, right? Up here, 71%. But look what happened. Price went in the favor of who? The majority. So you can't just automatically just go the opposite every time. Even though we are contrarians, we do look for it. We gotta be careful of that. However, there are some things that are in our favor when it comes to this contrarian using the forex client sentiment. Anytime you see mixed, you typically want to go ahead and start leaning towards the majority, and that is the key. That is the little hidden secret to this thing. If you see mixed right here at the top, mixed, all right, that is letting us know that we may need to look to go long in that situation. And as you can see on here, look what happened. We here it was mixed, and then we pushed up higher. Okay, so and once again, just because it says mix, you don't just automatically. It's a lot of things that play into it, but it can help us a lot if we can really um, get a hold of it. All right. Nothing in trading is going to be perfect. And so when I do these analysis and I give these reports and everything that's coming, all right. So tonight, be looking out. I will be emailing out for all y'all that subscribe. We'll be emailing out analysis on uh, allergy season. I found 5 stocks that have traditionally shown. I went back like 7 years, and I shown that during allergy season, because we got two types of allergy season. Right, you got the one that's coming right now in the spring, and you also have one in the fall. So you could be able to see how prices react on those. So that's the type of stuff I want to really get into and really help you guys with doing more of analysis. Like I said, I'm phasing out of doing so much of heavy teaching aspect of it. I feel like with the teaching stuff, there's a lot of psychology that has to be encountered for that. And I have to decide whether or not I want to get fully into the mindset and psychology aspect of that. That takes a whole different type of focus. And that's a possibility that I could do, but I need to focus on one thing right now. And I feel like the strongest thing is to dive deep into providing contrarian analysis, finding hidden markets for you guys, and keep it there. Once again, it's not financial advice, whatever I post. I'm just giving you analysis and breakdown, and I'm giving you my gift and ability to see things that maybe others don't see, to give some insights to. All right, so I look forward to continue doing these. These are real raw. All right, so they're not going to be as polished right now, but I'm just getting these out. Bear with me. Like I said, be on the lookout for the emails. I will find other formats to deliver these things as well too. Um, I want to try to keep some of them real short, simple. The research, I don't want them to be too deep because I don't want you to have information overload. So a lot of them be real, concise, to the point, highlighting the main things so you can keep fresh. I do know we're in an age of information, so you can't get information overload. Your mailboxes can be filled up with a whole bunch of things. So I am trying to find that happy medium of how much should be delivered weekly, bi-weekly, whatever. All right. Other than that, y'all have a great night. Hit the like button, subscribe. This is your boy E White. I'm out.